Business firms constantly decide whether to produce a product internally or outsource it from the market. This decision is not influenced by the only production cost, it is influenced by cost of transactions, which brings us to the strategic management important concept transaction cost economics. In this lecture, you will be understanding as a business owner, as a firm, as a startup founder, when you should produce something internally, when and what activities you should outsource. So the concept of transaction cost economics was given by Ronald Coase in 1937, and later on it was upgraded by the Oliver Williamson in the 1975. It explains why firms exist and how they choose corporate governance structures. It focuses on cost of transactions in the market. So the basic thing why TCs matter is that markets are not costless. When we approach the markets to outsource the product, it definitely costs us negotiation cost, monitoring cost, and enforcement cost. And the firms internalize transactions to reduce this cost. Uh, on basic level, first we need to understand what is a transaction. A transaction is basically the exchange of goods or services between the parties. It requires contracts and agreements, and it involves coordination and control. So the transaction cost is cost of searching information, cost of negotiating the contracts, cost of monitoring performance, cost of enforcing the agreements. I can give you example of China Mobile. When I was working as the research manager, we advertised something, we need some people to do the market research for us, and we were outsourcing it. So first I met more than 20 companies. We asked for the request for quotations. Many companies came to us, they explained their project with us, and definitely I was employee at that time, I had team, so we sit with them. So when we go to the company, we are being paid, so this was the cost we had to bear. We invited them, they sat in the conference room, we slightly give them refreshment things, tea things, so that is also cost. And then when we do the contract, that also cost us the things. And then the monitoring the performance, obviously a team is involved, obviously you track the numbers, they go to the market, they inspect the things. And for enforcement of the agreements, we needed certain terms of penalties and other stuff. So all these are the costs, transaction costs, that cost to the companies when they outsource something. There are few core assumptions of the transaction cost economics that we need to understand, that are the foundation of making transaction cost economics. The first thing is bounded rationality. Bounded rationality means the limited decision making capacity. We know that it is not possible for a human to know the 100% information about anything. The second thing is opportunism. Obviously, whatever company is making the decision, his self interest is his core priority. And third thing is uncertainty. Things are unpredictable, environment is unpredictable. So these are the core assumptions of the TCE. So bounded rationality means that individuals cannot process all information, contracts are incomplete, and unexpected events can occur. While the opportunism is the parties may act in self-interest, hidden information or hidden actions can happen and creates need for monitoring and safeguarding things. The core thing that we make the decision that whether we should produce something internally or is should hire someone, should outsource someone, is the asset specificity. If we are using something for general purpose, everybody else is using, then definitely we can outsource it. But there is something that is specific, then we must have to see that can we outsource or not. We have to produce it internally. So degree to which the assets are specialized, highly specific assets increase the dependency, so you do not want to be dependent on someone else. High asset specificity increases the transactions. Types of asset specificity, it can be physical asset specificity, human asset specificity, site specificity, brand specificity. And governance structure in TC is about the market governance, hybrid contract alliances, and hierarchy internal organizations. Market governance is about low asset specificity, high competition, short term contracts, and low control. And hybrid governance is about long-term contracts, strategic alliances, moderate asset specificity, shared control mechanisms. So once we trust the companies, for example, in case of the telecom, the companies have to trust the Huawei, those who install the physical infrastructure. When it comes to having the software houses, so you have to have the hybrid governance with those who have cloud computing services with you. So you do long-term contracts with them, you do the strategic alliances, you moderate the asset specificity, and you share control mechanism. Hierarchical governance is about internalization within the firm. High asset specificity, when there is something that you need to manage yourself, so you keep high asset specificity. I remember in the telecom sector, first the regulatory things were kept as something that is less important. But the moment the PTA, Pakistan Telecommunication Authority, and other telecommunication authorities around the world they starting interfering, then they made the high asset specificity thing the regulatory affairs, and they wanted the greater control and the monitoring. They used transaction costs were high, so they hired own chief regulatory officers. Make or buy decision. So make or buy decisions firms make internally. First of all, they decide that they should they make something internally or outsource to the market. Decision is based on the minimizing the transaction cost. If transaction cost is costing them high, then they prefer it outsource. If the specificity is not involved, as we understand, if the specificity is involved, then definitely we bear the cost and we make the internal things. TC versus agency theory. Our 44th lecture was about the agency theory. Agency theory was focusing on the principal agent conflict, that the principal are the owners of a company and the agent is the manager. So what happens when a manager start pursuing own interest, then definitely company suffers. So that thing we studied in the agency theory. The TC focuses on the governance structure, that how you govern your company. Both address opportunism and contract. Both are opportunism and the contracts. So in agency theory would do the same thing. In the TC we also do the same thing. TCC versus resource based view theory. Our lecture number 30th or 49th was on resource based view theory, that focus on internal sources. TC emphasized transaction efficiency and complementary strategic perspective. TC in supply chain management can also be used. Most of the companies make decisions in TC related to supply chain. They outsource the decisions. The vendor selection, contract decision, and risk negotiations are important that companies need to consider. In the age of AI, we can see the AI is reducing the information asymmetry. That definitely can help manage the people outside the organization. Smart contracts via blockchain are difficult to break. Digital monitoring reduces the transaction cost, and platform governance models are also being introduced that sort of create better implementation of the TC. Advantages of TC is that firms decide their boundaries, that what should we do and what we should outsource. It improves the outsourcing decisions. It enhances the contract design. It supports the governance strategy in the organization. So there are few people, they say that there are something that the TC must improve. That is, it emphasizes a lot on minimizing the cost. It underestimates the trust and the relationship, and it basically limits the innovation, and it has limited focus on the innovation, and static analysis concerns it take care of. As we were discussing, that specificity is extremely important, and then the cost is important. So main less focus is on innovation. When we do the innovation, the companies have to collaborate with each other. So this is the criticism which is done on the TC. And real world examples, we can say design internally, high specificity, manufacturing outsourced, marketing efficiency, balanced governance approach. So if you see the Apple, they have the design thing internally, while the manufacturing is outsourced for the efficiency purposes, and they have balanced approach of the governance. So students need to understand the transaction cost clearly. What is it? Basically, in simple words, it is about ensuring that you get less amount on the transaction. It costs you less. Whether it is costing you less while you produce it internally, or it is costing you less while you outsource it. So this is the thing you need to understand. You need to understand the bounded rationality and opportunism, that how humans have limited knowledge, and how we can, this assumption how much we are sure that we are going to make better decision. Discussion on governance structures, and then you need to link the make or buy decision. Managerial implications for the managers are the asset transaction characteristics, choose the efficient governance structure, reduce the opportunism risk, and leverage AI for monitoring efficiency. AI managers must use, because main thing in the The meetings that used to cost in the older days was going there, managing contracts, negotiations. But because of the AI, because of the AI platforms, because of the digital tools, because of the augmented reality, these things are becoming easy. And key takeaways we can exist that we can conclude is that TC explains why firms exist. Asset specificity drive the governance choice. If something is extremely specific, make it in-house. If not specific, you can outsource it for the market efficiency. Make or buy decisions depend on the cost minimization, and AI can definitely reduce the transaction costs in the 2026. Companies must use AI. See you in the next lecture.